Good morning, everyone, and welcome to the European crossover webinar. And we're seeing the euro just a bit firmer here. We have got the release of the PMIs, and bear with me. Starting off with the German retail sales, you can see them. They came in. All the numbers are coming in just a bit better here. At least as far as the PMIs, you can see on the Spanish PMIs at 54.9 versus expected 53, 51.1 on Italian and French coming in right in line here. And then German market services, once again, all these outperforming just a bit better, including the overall Eurozone PMI. We do have UK PMIs at the bottom of the hour, as well as the Eurozone Centix Index and producer prices. Well, the Centix Index is going to be at the bottom of the hour. Producer prices will be at the top of the next hour for Eurozone. Then coming in later into the States, we will have Canadian Producer Price Index and as well as Market Services PMI in the States. That's going to be at 9:45. My local time is Central, so Eastern is before. So once again, it'd be 8:30 for 8:30 Eastern, 9:45 Eastern for the Market Services PMI. And we do get ISM manufacturing PMI, also another key stat, which is going to be at 10 a.m. Eastern. So we do have a bevy of economic data this week, which tops off at the end of the week with the non-farm payrolls report. As we roll into the following day, we will have, and of course, we'll also have a Canadian IB PMI. That's going to be today at 10 a.m. Eastern. Now, as I mentioned, as we roll into the next day, we will get New Zealand business outlook figures, as well as Japanese services PMI and Australian goods services. Then coming to tomorrow, we'll have consumer prices out of Italy, also the flash numbers out of HICP flash numbers for the Eurozone. So let's go on and this out of the way. Once again, we're seeing the euro just firming up a little bit better off of these European PMI numbers. It's been relatively quiet. I mean, since the Asian session here in the in FX overall, we did see, despite the moves that we saw here with the you can see here with the S&Ps, saw a bit of a gap here. Obviously, the concerns were with the bellicose statements out of Iran. That we saw a strong opening also here in the 10-year notes here to the upside. But obviously the real big key was gold, and boy, did we see a pretty big jump here in gold. We'll go on and move this out. Look at this jump that we saw here all the way to 1591. We pared back quite a bit off of that to a certain extent, but wow, look at that, just nearly a $40 open on that before we pared back a bit here on the gold market. But we haven't seen necessarily a corresponding move in FX. The dollar's still holding up, although there was some concerns. I would think is that I would have thought that the dollar would have probably fared better. Now that was on Friday. So we're still kind of holding around here, so we'll see how this, wants to play itself out. We'll go and take a look at the news, and then we'll move on to the analysis. So safe haven currencies in demand amid the U.S. and Iran tensions. The yen and other safe haven currencies were in demand on Monday, along with assets such as gold, as investors fretted that the killing of Iran's most prominent military commander by the U.S. could trigger a broader Middle East conflict. The moves extended a flight to safety that began on Friday after Iranian Major General Qasem Soleimani was killed in a U.S. drone strike on his convoy at Baghdad airport. President Trump warned a major retaliation if Iran hit back, while Iran's replacement commander vowed to expel the United States from the region. On Sunday, Iran further distanced itself from the 2015 nuclear agreement with world powers, which the United States withdrew from in 2018, saying it would continue to cooperate with the UN nuclear watchdog, but would respect no limits to its uranium enrichment work. The Japanese yen surged on Monday to a three-month high of 777. That actually came in, and you'll see that into our support level, which is 778. Versus the US dollar in Asian trading, spot gold was 1.4% higher in the XAU at an almost 7-year high, and oil rose on fears that any conflict in the region would disrupt global prices. The Swiss franc, the safe haven currency, was trading trading flat too, though close to a 4-month high. The dollar was treading water versus 6 major currencies. Implied volatility gauges in the most traded currency pair, on the other hand, were relatively calm, suggesting investors are not yet fleeing to add protection to their portfolios by buying currency options. Currency sensitives to global risk appetite were weaker, including the Aussie dollar and New Zealand dollar. Iran is almost certain to respond in some scale, scope, and magnitude, said Lee Hardman. Therefore, market participants are likely to remain nervous until there's more clarity over how geopolitical tensions between the U.S. and Iran will proceed. So far, however, oil-related currencies such as the Canadian dollar, Norwegian crown, Russian ruble have yet to strengthen, even though Brent crude continued last week's rise and topped $70. Elsewhere, the British pound was trading at 103.76 or 130.76. Let's get rid of this. And the Australian dollar and New Zealand dollars hamstrung by troubles at home and abroad. The Aussie and New Zealand dollars look vulnerable on Monday as mounting tensions in the Middle East favored safe haven assets, while Australia's economy suffered with the drag from natural disasters at home. The Aussie edged to 69.40, having already shed 0.6 on Friday when United Nations forces killed a top Iranian commander. The move was again led by flows in and out of safe haven yen, with Aussie slipping to a 3-week low of 74.71, 70 Aussie Yen. Kiwi was pinned at 66.57 and some way short of last week's 5-month top at 67.55. That being said, the Kiwi is still doing pretty well, actually very well, because maybe it's off that top, but don't forget that top was after a 3-week very favorable run higher. With economies heavily reliant on free trade, the antipodian currencies tend to be shorted as a hedge against global uncertainty. In this case, the Aussie could draw some indirect support from steep gains in gold and oil prices, given the country is a major exporter of the metal and liquefied natural gas. Investors were also happy to load up with Aussie top-rated bonds, driving 10-year yields down to 1.219%. But in regards to the Aussie, the devastation is likely to hit consumer confidence hard at the time when households were already on a spending strike because of sluggish wage growth. The worst of the fires also coincided with the height of the Christmas shopping and tourist seasons and could drag well on the economic growth in both December and January. Investors have already reacted by narrowing odds on another rate cut from the Reserve Bank of Australia. A move in February is now put at 50 to 46% probability compared to less than 20% a couple of weeks ago. Once again, with that, I'm a bit surprised we haven't had much of a bigger movement here in FX, so we will go on and move to the analysis. So it says the euro closed below the prior breakout level of 1170. The pair defended the 1130 level on Friday, but a successful retest will be needed to encourage bulls to return. On a break lower, support comes in at 1104, followed by 1080. Resistance is 1197 followed by 1223. So you can see here that this key breakout level, this is 1170, you can see that coming across all the way here. We got above that. We made that run. Last week we were looking, remember, for a move to 1232, coming right across this key weekly level, which was confluencing with 1236 at 38%. We made it up there, and then from there we shed back, and we came off Friday breaking this 1170. Now, the key thing is that we did go in and defend down here. You can see this level here is 1130 here. So we did go in and defend this level, but we still, and we actually on Friday, later in the session, we actually got just above 1170, but we quickly slid back to close at 1156. So there's a potential for this to work lower. Now, that being said, I was a bit surprised as I was noting that we didn't see further strength, even on a temporary basis, in the dollar on Friday after the strike. So, which gives me an idea that we can potentially slide further here in the dollar. But once again, like I said, we're still trading relatively quiet, and it's a bit of a surprise that we haven't seen further moves here in FX. Now, we did see, as I mentioned earlier, the dollar yen come off, and that was actually right into a level that we have marked before, which is 778, but we will get to that in a little bit. But we'll see where we stand here right now. Like I said, potentially we could drop back again here to retest this level, and I think that that would be a good level. Coming right here towards this 1130. I don't believe that we would break beyond there. I mean, but like I said, we do have additional support 1104. But I think the market may have to come back a bit. Once again, I'm a bit surprised that we didn't see further movement either up or down in these currency pairs. Once again, I think we may have to move a little bit lower to see how the markets react sub 1170. Although we've held, but in a very, very quiet session. So looking back here, I would look for this market to come back, potentially to pick up some longs that may have dropped off over the weekend. So I just don't know if we make it all the way down here. That's going to be support. It's 1130, so we'll mark this off. There. On the upside, we're going to have 1197. But I would think that we'd have to dip back down here to come back and pick up some longs, and they have to show, okay, I'll pick some here, I'll pick up a little bit here, and let's see how they hold. If it holds, then we can start to work a little bit higher. Because once again, we've come in rather flat as we've come into the session. Let's go and move into the cable. So cable retreated more than 200 pips from the week's high, finding support at 30.50. The pair is on the defensive mode, despite being above the pivot of 29.80. The 30.15 level is the first test for bulls, and that's, for this market to go on hold, is the first test for bulls to defend with a make or break at 29.57. The bulls need a daily close above 31.29. You can see currently we're at 31.17 to regain control, with additional resistance at 31.95. So as I mentioned here, what we're looking at, what I was stating here, or what we're looking for is right here. This is going to be important here, coming in at 30.15 right there. For bulls, I said that would be that first test. So they're holding above here right now. But to me, the resistance comes in, or it's key for them to get above 31.29 in order for bulls to regain control. So if they can close above 31.29, that'd be key for bulls to go on and regain control. We're not that far away from it, but that's what it would take right now, because we are still above. When we look at this in a bigger context, so to speak, you can see here that we're still above the pivot of 29.80. So the cable has come off quite a bit, and it was a big disappointment from here, and boy did we sell off. That being said, respecting the technicals, we are above the pivot, so it's still going to be bullish, but nonetheless, this was a disappointing 2 days, Thursday and Friday. So once again, we'll Look for resistance here at 31.29. We had 31.20. Just mark that up 1 pip. If we can get a daily close above that, the key is going to be the close. So let's go put an asterisk here. And what I do is put this back. When I put an asterisk, that means it's a key level on a closing basis. Now, most of these levels may be intraday or key that we see on a close, but 31.29, because remember we have above that would be 31.95. But it's key if we can get above, if we can regain 31.29 on a close, then bulls would regain the shorter term momentum. Okay, first test on the downside, as we mentioned, was going to be 30.15. We are above, let's see, right here, 30.50. Let's move this out of the way. So initial support right now is then going to be back to this 30.50. So we'll have that, because although 30.15 is important, we're doing pretty well at this point here, close to about 31.20. That's almost 70 pips away. So bear with me. Let's go move into the Aussie. And last week we've been looking, right from the get-go, we were looking for 70.27, noted it as a key weekly level here. And that happened to be confluence. It was 70.32, the 50% of this range. And that's where we went to. I mean, we exceeded just a bit, and then since we've gone and backed off. So the Aussie is paired back after reaching the 70.27 level. Confluence was 70.32, the 50% of 68.91 to 73.94. Support is the breakout level of 69.14. You can see that. With 68.83 key for bulls to maintain. If, like I said, we were going to press down to 69.14, probably takes out some stops, potentially below 69, even if we make it down there. But it'd be key for them. They have to defend that 68.83. And that would be to maintain the newfound positive momentum that they had. And that newfound positive momentum is breaking this long trend line you can see here, back at the beginning of a year-long trend line, downtrend line. So we're still in a bullish mode, because, like I said, we've broken that. But like I said, if we were to come down here, it'd be key for them to defend that 68.83. Pair back is reasonable. I mean, we haven't had a great rally, but it's been a rather decent rally, so it's within reason for them to go on and come back. Support does come in here at 69.14. We'll give a little bit further move lower here. So once again, it's going to be 69.14 for them to defend. They've already pulled off quite a bit, so that's why we're holding steady. Shorter term, we're probably looking, I guess we can say shorter term, we'll give it 69.22. And on the upside, right here, 69.97. See, this is a very, very nice run here that we've had here in the Kiwi, and look at that. So, like I said, the story was saying, boy, they're off their highs. Well, let's look at things in a reasonable fashion. Look at the epic run. I want to say maybe epic might be a little bit of a hyperbole, but this has been one heck of a 3-week run here that this market just simply did not want to get back, kept pushing higher here. So, looking at the Kiwi has eased back following the stalwart run over the prior 3 weeks. Initial support is 66.36. followed by 65.96. Initial resistance is 67.03 with a daily close above 67.32 to ignite a new upside leg. So potentially we can still make it back up here at 68 cents, but obviously with the geopolitical concerns, we may have to go on and ease back a little bit further before we can potentially look for a move there. And as I mentioned here, the resistance support is going to be 66.36 on this, at least initial support on this pullback. And on the upside, we're looking at resistance at 67.03. I'll tell you what, we'll leave that 66, only 2 pips. We'll leave that there. There you go. And 67.03. Still quite bullish. And we'll move on to the dollar CAD. Well, at the beginning of last week, we were looking for a move. Well, not an immediate move, but looking for an eventual move, I should say, to 29.02. We had thought, from last week, 30.53, which the market initially defended, and we thought, okay, they'll probably still hold at least a pause here at 30.29, but it went through that like quick. And still there's an eventual target here for 29.02. Also, when you look at also as a commodity currency, with gold also being higher, should go and also be helpful, not to mention crude oil. So it says the dollar CAD remains on pace for a move to 29.02. The pair is oversold, attempting to hold 29.50. Initial resistance is 30.29, followed by 30.54. Bulls would need a daily close above 31.09 to negate the move to 29.02. Well, it certainly doesn't look like that's going to be the case, and we're at 29.74. We do look like an eventual move down here to 29.02. On the way down, let's take a look here. Before we get there, some support here at 29.30. But I do think we'll eventually get down to that 29.02. But you can see here the market is rather oversold. They're trying to make a stand here. So once again, we'll be 29.30 on the support. Hit 33. That's going to move that down to 30. And on the upside, well, they're selling into this thing like nobody's business. So let's go on and take a look on the intraday. So resistance is going to be right there at 30.05. And definitely bearish. Moving into the peso. The dollar peso found a brief rally that was quickly pushed back to close below 18.92. A potential move to 18.65 remains in the cards, with initial support at 18.82, followed by 18.75. Resistance is 19.05, with the daily close above 19.80 necessitated to break the bear's grip. So we still look like we're going to go and make this move down here to 18.65, which you can see here. Confluence is 18.62. We did see a bit of a rally here, a brief rally here on Friday amid all the news, but they quickly took advantage of that and pushed this back down. Now we're still trading in a relatively tight range, but we did close below 18.92. Now, if we do get some kind of a move here in the dollar, it's not going to change anything. I don't believe it's going to be here for 19.05 on the upside if we were to get that move. There's some resistance here at 1898 here. But once again, we're trading such a tight range, we could easily goose some stops. So we'll give a little bit wider view. So 1905. And on the shorter term outlook on the support, 1882. And that will be followed by 1875. That's what we looked for them to find some support. Now, on the dollar yen, you can see we've had this 778 here in place for a long time. And that's exactly where we went to, 1878. The market, I had that previously as support. Hang on. But the market came up just a little bit short of that. I don't know, maybe the low might have been like previously like 883 or 4, something like that. But obviously on this pullback on Sunday, we actually made a dip down there and actually tagged the 778. So let's go on and take a look at the analysis here. The dollar yen reached the key support level of 778 despite the equity bullish picture. The bears are in complete control of this market. Sellers return beginning at 854, followed by 892. Bulls will require a daily close above 970 to negate the bears' control. And the reason I make that so high, I think at 970, but I'm just saying is, look, this thing has been just not been able to go on and muster any real move higher with any conviction. So, anything back here, look, the bears are just like, as I mentioned, are in complete, total, full control of this market. I don't care if we get to 850, 950. This market is still a sell. The only thing that would change that would be a daily close above 970. So we're at 795 right now. Market's a bit oversold to say the least, but resistance is going to come in right there, 857. And I may have a tough time even getting there. We did make it to the 778, so how much further can we push? I think the S&Ps are open to a pullback. They're back at the lows here, 31.21, but honestly, that's not even saying that much. This market can really come on, I don't want to say come undone, but in a true sense, but I'm saying is we've had such an epic move. Pull this back here. You look at that, and considering everything that's going on geopolitically, a pullback just to, I'd say right there, 31.72, and that's not even saying much. That's just barely a blip almost. So you're talking 38 handles. Well, 38 handles, that probably drop us right down here. So there's still a lot more risk as far as pricing the SPOOs, where we can pull back, which would, manufacture itself in a much slower move here in the dollar yen. So we'll go with support right there, which is going to be 726. 726. It seems a ways down because most of our analysis is very, very short term. But the thing is that, like I said, when you look at, that's why I want to show that S&P chart. When you look where the S&Ps are, we can still slide quite a bit indeed. So, and then of course the moves that we've seen here with crude oil and obviously gold, which has to be a concern here. To me, I would think, if one is dollar bullish, because once again, I'm a bit surprised here of the lack of movement that we did see in the dollar. Usually when we see this dust up, we'll see a quick move. Even if it doesn't last very long, we'll see a quick move in the dollar. We simply didn't see that. Now, once again, FX still remains rather quiet in light of the moves we've seen, but once again, it's something that I would look at, why I think that if we got pullbacks in the euro, those would be supported. But once again, we'll see how we start this morning. I think we will have to test a little bit lower, I believe, in the euro because of that close that we did get below. And I'll just go on as I mentioned, because we got that close below this 1170 on Friday, maybe a little bit reluctant to come in. I think if we can come and dip down here, then you'll pick up some buyers, really probably close to around the 1148, 1150-ish area here. We'll see if maybe they can't dip a little bit lower, and then we find those buyers for an eventual run up here. But we shall see. That being said, let's go move into the aforementioned dollar index. And this is what I'm talking about. I mean, we did move higher on Friday, but I would have expected a little bit more juice here. You know, in light of everything, I would have expected something closer to about 97.50, which would have put us about, 40 some, ticks higher. And it just, at the time, I'm talking about Friday. So I think I would have expected something at least around 50, maybe even pushed as high as 97.68. So to me, that was a rather feeble price action in light of what happened. So it says the dollar index slightly rebounded off the week's lows, but remains with a bearish tilt. Resistance comes in at 97.17, with bulls needing a daily close above 97.37 to temporarily risk control for the bears. Support is 96.56 with a move to 96.01. Confluence with 95.82 still in the card. So I'm still looking for this move down here to 96.01, which really I'm looking for a bit of an overshoot to 95.82, the 161% of this failed move here. And we'll point this out. And there's your 161% right there. So once again, I would have expected a far more stronger response on Friday, even if it didn't last. So that's a bit concerning here. As I mentioned, we were saying 96.56. I think we have to push this, let's see, down here to 96.48 for support. We said 97.17, maybe a bit of a stretch here at this point. So we're going to go with stay with this 97.07. And it's still bearish. With that, we'll go and move into the cross rates. So after a relentless 3-week run, the pair has eased back to 71.83, and that's here on the Kiwi Yen. That's actually the 23% back of this entire move here from 66.30 to 73.54. So we did come right here to the 23% back before closing at 72 cents. That's where we closed at 72 cents on Friday. To start the week, the initial support is going to be 71.69, followed by 71.30. A healthy pause is due, and resistance is going to be at 72.58. So once again, support's going to go on and come in here at 71.69. Now we have resistance at 72.58. That may be a little bit tough to come by in light of everything that's going on, and I mean with the yen strengthening. So we're actually going to move this the lower the resistance down here to 72.25. So we're going to keep it rather tight for Monday. but this still remains bullish. Obviously, the break on this trend line, but look at the extreme move here on this trend line. But certainly, we'd look to do a little bit more work here. Potentially, I think we can get down here to 71.69. If nothing else, from a technical standpoint, come down and try and pick up some bulls. And those that may have been short would be looking on scale. We did make it to 23%, which is 71.83, but a test of that would make sense. Let's go and move into the euro yen. The euro yen closed a week below key short-term support at 20.76, allowing for a further test to 120 even. The pair now has a defensive posture with resistance at 21.15, followed by 21.58. Well, I'm going to go with this 21.15, keeping it relatively tight. Moment. The euro's holding up a bit better, so maybe I don't say tougher, but we're looking potentially for this move down here to 120. At least for the start on Monday, we're going to give a little bit of the benefit of the doubt. We're going to go right there. You see right there coming across here? So we're going to go 20.35 for support. And for those that are looking to add back or add, then basically look at that as a risk level. Yeah, let's go into the euro Aussie. So the euro odds spent the week basing just above major support here at 59.54, finishing the week at its best levels. The initial test for bulls is a daily close above 61 cents, followed by resistance 61.78. Support is 59.75. Well, we may have to adjust that support because not only do we finish the week at a better level, we basically just jump right up here. So resistance is going to be 61 cents, but once again, actually we'll go with the 61.04 right here. But the key is going to be a close above 61 cents. That's going to be the test. But we'll go with the 61.04 right here. And support, well, I think we have to give this, we have to 59.75, move that a bit higher. And we'll put here for support coming in right there. You see there? Right there at 60.34. You may have to move that up a little bit higher. There's a little bit you can see here of good trading coming across right here. The tops here and right here. We're going to go with 60.45 for support. 60.45. Let's go move into the Euro Kiwi. So the Euro Kiwi took out short-term resistance at 66.80, providing minor bullish momentum. The first test for the bulls is 68.04. You can see we went right to this where we just about made up to 68.04, and you can see we pared back a bit here. The first test for the bulls is 68.04 with a daily close above that, marking the first successful stand against the bears. Immediate support is 66.63. Once again, because we've added on to that close with the weakness we're seeing in the antipodian currencies, that being the Aussie and the Kiwi, we'll go and have to adjust that support higher. So once again, we'll go with 68.04 for resistance. important if they can get a close above that too, an actual close. Support now. We can go right here, right there, 67.35. We'll go 67.35, give a little bit of the benefit of the doubt with the momentum they had from Friday's close, which and they added on to that early on. So let's go with 67.35. Keeping it once again relatively tight on this Monday. And let's move into the Aussie Yen. So the Aussie Yen finished the week on near the finished the week on near the finished the week near the lows. I was going to say on the lows, but actually wasn't right at the lows. But you can see it even pressed even further. Support comes in at 74.73, which is confluencing with the uptrend line at 74.58. A break lower finds solid support at 74.02. Upside resistance is 75.62. A daily close above 76.19 will allow a new upside leg. Well, we not only finished the week, and at the time, that's why I was kind of confusing right here, is I wanted to say at the lows, but it wasn't at the actual low, but it was right at around those lows. And we've actually pushed even a little bit lower. But we held, and you can see here, 74.73, confluence with this uptrend line. So we'll go with 74.73 to keep it relatively tight. Still a bit concerned with what we've been seeing in equity. So let's go in and tell you what, we've come off, but still a bit concerned. We may take a little bit of a dip lower. And the actual low was, well, we did make it down here to 74.73. Let's go and go with the 74.58. I still prefer that if we make a move lower. Maybe not necessarily today, but at least you know where they can move down to. We're still holding it relatively well, but if they do find themselves working a little bit lower, if we see lower equity prices, at least you know where the initial support, we have some nice confluence there, coming at 58. Resistance, let's go into the 2-hour chart. It's going to come in right there. 75.32. As long as we're above that trend line, it's still going to be bullish despite the price action we've seen. Let's go and move on to the guppy. So the guppy closed near the low for the week's range. Overall, the pair is vulnerable to move to 39.12. Immediate support is 40.74, followed by 40.24. Sellers will restock at 42.38. 42.38. And you can see that coming in right there. There, you see that coming across right here? So 42.38 is what we're going to have for our resistance. Support, well, we've seen a nice little rebound here. So support, let's go and move into the 2-hour chart. 41.56. See this line come right there across? 41.56 for support. And we'll finish up with Sterling Odd. Sterling Odd is holding above the trend line despite the pullback. Support comes in at 87.03. A daily close below that allows a challenge to 85.70. Resistance is 88.80. We're actually just above that, followed by 89.73. So we're just above that 88.80. Let's take a look and see right coming across. You see right there? That's 89.31. Actually going to mark it off, just to make it clear. There you go, 89.32. You can see we're coming up right across these openings and closes right there. So 89.32. Support, we are holding up rather well. Support's going to be tight right there. 87.87. And there we go. Well, look at that euro. We have moved higher. Look at this. 11.90 now. And you can see this dollar index pulling lower. So we've seen this continued move here. Once again, I was talking about the dollar index is at rather disappointed in the sense I would have expected a far better showing on Friday, and it's left it vulnerable. So when we see this pullback down here, at least into the 11.48, but we're pushing higher here as the dollar's weakening here. And you can see here, Canadian dollar continue to push lower. Cable pushing higher here. We are above that 31.29. Key will be the close, but the next level of resistance is 31.95. So starting out with a bang here with the cable. And peso continues to remain a bit under pressure. Resistance here for the euro is going to be 11.97. I was kind of hoping, I don't have any euro exposure now at this point. I was, kind of hoping we get that dip down into the 11.48 and reestablish longs, but we'll see how everything plays itself out. But thanks for joining us here on the European crossover webinar.